Hello everyone, friends. The sharp movements we've seen in the markets in recent days are not a panic, but rather signal a repositioning in the markets. Volatility has increased significantly, and as a result, of course, investors' appetite for risk hasn't completely disappeared. However, investors have started to reassess the risk weights within the system, and of course, the global appetite for risk hasn't completely vanished, with attempts to rebound still ongoing. But US stocks are clearly under selling pressure, and we can say that the reason for this isn't just macro data, but also the strategic and financial reactions coming from the European front. In other words, following the trade, tariff, and geopolitical pressures from the US, there's been a growing narrative in Europe about distancing themselves from US assets. So this isn't exactly a move to sell off and exit the US directly, but rather a conscious shift in portfolio direction. What I mean is this: the money isn't leaving the system. Rather, we can say that funds are moving away from US assets toward gold, commodities, and other alternatives. And at this point, it's not just US assets. Risks related to exchange rate volatility have also emerged in the currency markets. The IMF's warnings about liquidity risk in the foreign exchange markets, followed by the G7 putting exchange rate volatility on its agenda, and major brokerage firms publishing cautious reports, all further support this picture. In addition, employment data from the US showing signs of weakness, rumors about deflation circulating behind the scenes, and ongoing uncertainties at the Fed are all increasing the pressure on American stocks. And in line with this outlook, Goldman Sachs released a statement. Goldman Sachs said, "Get ready for sharp sell-offs in the markets and stock exchanges." They made a clear statement to that effect. The reason for this, they said, is that in the current period, trend-following algorithmic funds could make multi-billion-dollar sales in the coming days, even if the markets move upward or rise. That's why their message is clear. Investors in the American stock market need to be prepared for sharp sell-offs. Aside from that, another piece of news on the opening day of the week is this: Chinese regulatory authorities issued a warning to financial institutions. They advised imposing restrictions on positions in US Treasury bonds, warning both financial institutions and investors. So to sum it up, we can see that a cautious stance toward US assets is strengthening on a global scale. Now, there are some questions at this point, right? Why will gold rise? That's what investors are asking right now. In short, the joint message from the IMF, G7, and major brokerage firms is very clear. Issues like currency volatility, liquidity risk, and policy uncertainty will be the main themes in the coming period, and this is pushing investors toward balance and protection rather than aggressive risk-taking. So instead of currencies like the dollar, euro, or pound, gold is coming to the forefront. Both individual investors and governments are clearly continuing to increase their gold holdings. And of course, we continue to monitor the markets as well. Now we're going to move on to the charts. But before we get to the charts, what do? In this video, once again, I kindly ask for your support in the form of likes and comments. Every comment and like you leave is valuable to me in the face of YouTube bots and algorithms. Thanks to the followers who have supported in the past, who continue to support, and who find these broadcasts valuable. Look, first of all, I want to show you the current outlook in the American stock market, because one of the main reasons for comments from brokerage firms like Goldman saying that algorithmic bots might sell is the significant weakening in the trends. Look, according to my own indicator as well, it has stayed below the cloud indicator, and in fact, it has entered the area where a red cloud is formed here. Of course, there is a similar outlook here as well. After that, prices recovered in the American stock market indices, but still, it wasn't an upward trend. There was a sideways period here. So the risk in the American stock market continues. When I look at my indicators, I've actually been seeing this for quite a while now. I've made recommendations like risk-off sales and taking profits on stocks in the American stock market. In particular, I also suggested at least shifting from mid-cap stocks to large-cap stocks. Losses in mid-cap stocks are currently between 40% and 60%. But again, surprisingly, over the last 2 months, I explained to you that Borsa Istanbul could actually yield more profit than the American stock market. The reason I say surprisingly is this: usually, the American stock market always delivers higher returns than Borsa Istanbul. But my expectation during this period was exactly the opposite, and we actually saw that opposite movement. While Borsa Istanbul was offering over 30% gains as an index, The American stock market indices showed zero movement during this period. In other markets, we have largely met our expectations and continue to do so. The only place that hasn't made me happy is the cryptocurrency market. In a moment, I'll talk about all of these separately, and I'd like to add this. The real danger zone in the American stock market index will occur if the 23,950 level is lost. But still, what investors should do is maintain a cautious stance toward American stocks for now. That's just my humble personal opinion. Look, when we look at gold, I've been talking for a long time about how gold has an extremely strong stance, an extremely strong trend structure. Last week, at the weekly close and the week before, it offered very good opportunities for new investments. Look, when it reached the $4,500 level, I clearly and explicitly told you that both in ounce gold and gram gold, it was a good opportunity area for investors, that gold was in a buy zone. Some investors want to get certain information much faster during this process. So an investor, a follower, wrote a comment. For example, there's a guy whose profile picture is him eating a doner sandwich, and he says, "I want to get data faster. Just tell me briefly whether to buy or sell both." That's the kind of comment he made. I mean, you really can't find a broadcaster in financial markets who can condense this much data into such a short time frame. Explaining all the markets and doing it in 13 to 15 minutes isn't exactly an easy thing to do. I think we're already at the ideal duration, and I don't want to give timing advice to those who manage to finish their doner and their last sip of iron at the exact same moment. You'll always find time to watch the videos, my friends. Now, if we get back to our topic, investors are still asking whether there are new buying opportunities within this strong trend structure in gold. Look, the best thing new investors can do here is to make gradual purchases because it has already made a move that took it a bit away from the opportunity zone. Last week, when it dipped back to this $4,600 region, it was once again a clear buying point. It moved above this area, and as for the trend, I don't expect spot gold to lose the region I've marked here, the $4,500 to $4,700 range. I mentioned that silver is showing a somewhat weaker trend on the outside as well. If you remember, according to my cloud indicator, it stayed below the cloud region. It still hasn't managed to rise above the cloud region. The trend in gold is clearly stronger than in silver during this period. But still, we can say that the $70 to $73 range has worked well as a buy zone for silver too. Based on the confidence rating I mentioned during this period, this is what I said. If you buy 10 units of gold, you buy 3 units of silver. You make your assessment accordingly. You evaluate the lows based on this too. That was my point, and so on. At least to be able to explain my perspective, because I'm explaining that it makes more sense to have a heavier position in gold and that this is a very reasonable option. Investors have started to see this in recent days. For example, those who said things like, while silver was going up, you made us sell silver, have faced a huge disappointment. Those who sold silver and switched to gold not only had the chance to increase their assets more, but also avoided wearing themselves out psychologically. They put themselves in that situation. Look, it's not just about making money. There's also a psychological side to it. You need to make your investments in a balanced way so you don't wear yourself out too much. This is why I explain all the products at once in these videos. I am investing in each of these simultaneously because looking at gold, the 6,300 to 6,500 teraliters level per gram was a great investment level for us. Prices even dipped below this spot. It even dropped to almost the 6,100 level. Gram bold, but the range I considered as a benchmark was between 6,350 Turkish lira and 6,550 Turkish lira. From here, gold started to climb back up again. I think we will continue to see these increases in the upcoming period. We will see a gram of gold breaking 7,760 Turkish lira and moving even higher. We will watch. When we look at the silver side of things, what does the chart look like there? If we ask, there too, look, it dropped all the way down to 90 Turkish lira levels. I mean, can you see the movement in the recovery for an investor who bought at the top? When we look up from the bottom here, there are investors in silver expecting an 80% move in silver. And as a trend movement, it's perfectly normal for it to keep moving upward as well. But I think its trend is in a somewhat weaker position. So in my opinion, it doesn't really make sense to show too much interest in silver. Look, on the stock market side, another bold statement I made was that the rise in Borsa Istanbul would continue relentlessly. Look, the area I marked is still here. With the 10,800 level, Borsa Istanbul reached record highs. It surpassed record levels. After that, it came all the way up to my 14,000 target. Most recently, we saw a selling move in here. And on the 4-hour chart, it has now tested an important support level here. Look, my support is here at the 13,200 level. Borsa Istanbul got a reaction from the cloud region. So it's really not a big problem for us if it drops back down to these levels again, because in the coming period, I expect it to break the 14,000 level and for the upward movement to continue. Of course, there are also many investors asking about individual stocks or investment funds on this topic. We get to talk about these things a lot in the YouTube members chat. Those who want more details and more information can join our chats there. I especially recommend that you join. By the way, I also want to add this. It can be considered on the gold side as well. If you ask which product is a bit behind in terms of value, a bit cheaper, the answer is Tether Gold. This is a product I can give as an example. You can buy and sell Tether Gold on OKX, TR. I want to point out that their commissions are ideal. You don't have to deal with buy-sell spreads, and you can buy and sell gold 24/7. Of course, this exchange is my sponsor, and I collaborate with them. I've told you many times that I personally have taken advantage of this opportunity and made use of it, and trying out and evaluating this product has brought profits to investors. There are links about this in the description section of the video. Of course, the choice is entirely yours. Other than that, when we look at the cryptocurrency market, Bitcoin, after reaching the $71,388 region, it still hasn't managed to break the trend here. Look, even the $75,000 level here isn't a particularly important area. I want to show this clearly. Look, according to me, according to my indicator, it has shown a trend that remains below the cloud region and continues to weaken. At the end of the day, what we want to see with Bitcoin here is that it holds above the $71,388 level. Because with this support, technically, Bitcoin will have turned into the positive zone. We saw a move in the upcoming trend where it faced serious sellers and showed a direct correlation with American stocks. In other words, the decline in mid-cap American stocks was mirrored by the cryptocurrency market as well. But the difference in the internal dynamics of crypto is that money continues to flow mainly into Bitcoin. After that, major altcoins like Ethereum and XRP, and money continues to flow out of smaller altcoins. In the upcoming period, it's likely that small altcoins will continue to face problems. And for investors who want to reduce risks in the cryptocurrency market, they can also consider products like Tether Gold. There are links about this in the description section of the video I just mentioned. Adjusting your portfolio and evaluating these options is entirely up to you. But listen to this brother of yours. That's what I say. My efforts are truly genuine. It's all about helping you lose less money and gradually increase your balance step by step. At least that's the direction of my advice. If we turn back to the market outlook, in the coming days, we'll be watching to see whether Bitcoin returns to positive territory in the crypto market. And it's not something that's far off in the distance. If it holds above the $71,400 level, I think Bitcoin's range of movement will be in a very wide band. It will have entered a significant gap area all the way up to the $84,600 level. I hope we see this move and a trend where investors also start to recover a bit. On that note, of course, besides that, we're in a pretty simple zone for altcoins other than Bitcoin to recover a bit more. Look, on my indicator, the resistance zone has been touched. It's in an area very close to there. If it holds above the 7.37% level, the cryptocurrency market as a whole will also enter a relief zone. But first, in the next day or two, we need to see a bit more positive movement in the crypto market. Basically, apart from these, there aren't any major changes of variables to talk about specifically for the crypto market. There aren't any big moves in the prices. And besides that, there's nothing else to add. No matter what happens with the prices, I hope you're all doing well, friends. See you in the next video. Take good care of yourselves. Subscribing and turning on notifications is an investment in yourself. Hope to see you again soon, bringing you updates before they even happen.